Have you ever done some overtime at work for what seems like a lot of money, say £500, but when your paycheck comes in, it's got nowhere near £500 in it? Where did that £500 go? Could that £500 before tax become just £118 in your pocket? I'm Dr. Tommy Perkins and I'm a GP.
And I'm Dr. Ed Cantelo, a GP, but also a chartered accountant and a chartered tax advisor.
Our channel teaches doctors, dentists, and other medical professionals everything they need to know to make better financial decisions. Don't forget to hit the like button and the subscribe button and ask your questions in the comments. So, you're thinking about doing some overtime, but how much money will you actually receive in your pocket after tax and other deductions? We are going to use a real life scenario to demonstrate how this works out at 3 different levels of income. But first, imagine that I need to get my house painted. Would I be better off doing extra shifts at work to pay the painters to paint my house for me? Or would it make more financial sense for me not to do any more work and do the painting myself? And spoiler alert, even for those of you on £100,000 a year, you're in for a shock towards the end of the video as we show you exactly how the take-home pay works. So let's look at the costs first. The painter is going to charge me £500, £25 an hour for 2 days work for the painters. How much overtime would I need to do to pay the painters? Well, it depends on how much you earn. So let's take the scenario of a doctor earning £37,700 a year. At that stage, you would have been a doctor for 2 years. Technically, you'd still be called a junior doctor, which infuriates me because you're not junior at all. I didn't feel junior at all at that stage when I was running around the hospital making lots of life-saving decisions every single day. And you've also worked incredibly hard to get there. You've done your A-levels, then you've done 5 years of medical school, and you've done 2 years as a doctor. You're getting £37,700. If I go to work and earn an extra £500, how much will I actually take home? Now, here's Ed to tell us how the tax works out.
Yeah, thanks, Tommy. So, as you say, you've got a salary of £37,700 and you're going to get an extra £500 of locum income. Before we come to what happens with that extra £500, just a little bit of information about the numbers that you'd see when you earn £37,700. So, basically, you would end up, after various deductions, getting your net pay for that amount of money, okay? So just think about what deductions you would have to take off that gross income. So first of all, don't forget you've got income tax, naturally. At this level, you'd be paying a 20% income tax rate after your personal allowance. But also as doctors, we get our NHS pension. At that level of income, you'd assume that you pay a 9.8% rate into your pension. And of course, that is tax deductible, okay? So you'll see the numbers here. You'll see that you're getting a tax deduction for your pension contribution, as well as your tax-free personal allowance of £12,570, which will then give you your income tax at your basic rate, which this is 20% in England, Wales, Northern Ireland, slightly higher in Scotland, okay? You then have to think about other things that you're deducting, okay? So first of all, you've got to pay national insurance. We're also assuming that this person has a plan for student loan, which is 9% above the repayment threshold. And then, as I say, because of that income level they've got, they're going to have a NHS pension tier rate of 9.8%, okay? So in that example, the total amount that they're going to pay in tax and other contributions is £11,900 and 88 pence, okay? Now, if you get an extra £500, of course, you will be getting £500 gross, but you have to think about what happens to your net income. So you will see an increase in your income tax of £90.20, okay? So that's what you'd expect, okay? It's basically 20%, the tax rate, but don't forget you are going to get a slight increase in the amount of pension you pay, and that is tax deductible, which is why it's not quite 20%, okay? You then also have to pay some more national insurance at 2%, and your student loan as well, okay? So basically, if you look at these numbers, what's going to happen is you're going to end up with £500 gross, but net of everything, you're going to end up with £255.80 in your pocket, okay? That's giving you what we call a marginal rate of 48.8%, okay? So yes, the income tax rate is 20% at that level of income, but the extra £1 in your pocket, as it were, you're losing 48.8% of that to income tax and all the other things that we just mentioned, so national insurance, student loan, the NHS pension. So basically, if you were earning £37,700 and you got an extra £500 of income, you're going to get net £255.80. So if you then say to yourself, well, your painter is costing you £500, what you find is if you do 2 days of work at that level of income, you would end up with 2 lots of £255.80. So you'd end up with £511.60 in your pocket, net of taxes and national insurance and student loan and pension contribution and so on. So you're going to end up being basically just about better off doing the work there.
Okay, so that's the numbers for someone working at that level. We're going to do the numbers on 100,000 in a minute, but before we do that, let's say that you are now a senior doctor. So you have worked for 7 years as a doctor. You've likely spent hours studying for postgraduate exams, and you are essentially running the hospital. Again, you're still called a junior doctor, but you are not junior in any way, and you are earning £60,000. So let's look at how the numbers work out for someone on £60,000.
£60,000. At this rate, you've started to start paying the 40% higher rate of income tax. Again, we're talking here about England, Wales and Northern Ireland, by the way, because I know that in Scotland, it is slightly higher. It's 42%. Okay, so these numbers here, apologies to Scotland, but they're showing someone in, let's say, England. Okay, so you're paying the higher rate of tax, 40%. You've still got your national insurance, which by this point, you're onto the 2% rate of national insurance. You've got your student loan, so 9% repayment. And at this level of income, you're in the NHS pension tier, 12.5%. Okay, and don't forget, of course, that is tax deductible as well. Now, if you find that you get an extra £500 at this level of income, you will, of course, be paying that 40% income tax on that £500. But of course, you then get the other things. You'll get that 2% national insurance, 9% student loan, and of course, your NHS pension, which we're assuming here is 12.5% with a tax deduction on that increase that you pay. So what you end up finding, if you have £60,000 of income and you get an extra £500, after all those deductions, net of everything, that £500 is going to be £207.50 left over in your pocket. Okay, so a marginal rate of 58.5%, because for every £1 that you earn, 58.5% of that is going to the government. In this scenario, as you can probably work out, it's actually getting to the point where you're better off doing the painting yourself now, because if we're assuming that the painter costs £500, in our example, £500 of locum work is getting you £207.50. Even if you did 2 days work, you'd only be £415 better off. You basically would have to work nearly 2.5 days as a doctor, or 2.4 days to be exact, to be able to pay that £500 to the painter. So by this point, it's starting to look like you might actually be better off doing the painting yourself.
Which is absolutely crazy, but it's really important that you understand how these numbers, and if this is helping you to understand how these numbers are calculated, hit the like button, hit the subscribe button, because we've got plenty more content like this. Let's look at the numbers for someone who is earning £100,000. At this level, you are a very senior healthcare professional, a doctor or nurse. You have trained for years and you are likely doing life-saving work every single day that you're at work. You are earning £100,000. If you earn an extra £500 doing a locum shift, how do the numbers work out for this, Ed?
Okay, so let's have a look at a doctor who has an overall taxable income of £100,000 and see what happens to them if they do a locum shift and get another £500. Okay, so I'm using my wording carefully here because we're talking about a taxable income, or in sort of tax language, an adjusted net income of £100,000 for a reason. Okay, now because we know that the NHS pension is tax deductible, that would be assuming that this doctor was getting an original salary of around £115,000, or £115,000 and £608 to be precise, because then after the pension contribution, they would have a taxable income of around £100,000. Okay, at this income, or this taxable income of £100,000, funny things happen. Okay, you fall into what we call the marginal rate tax trap. Okay, because when you start to increase your income from that point on, you begin to lose your personal allowance. So for every £2 you go over £100,000 of adjusted net income, you lose £1 of your personal allowance. Okay, so for this person, they are already going to be paying their income tax at 40%. their national insurance at 2%, the student loan at 9%, and for this level of income, the NHS pension tier would be 13.5%. If they then get an increase, or they do an extra shift and they get £500, they would then end up seeing, of course, a slight increase in their pension contribution, which is tax deductible, an increase in their national insurance of 2%, increase in their student loan at 9%, and their income tax would be at 40%. But don't forget, as I said, they lose their personal allowance. And what that basically means is that their marginal rate of tax after everything in this situation comes out to be 76.4%. Okay, so a very high marginal rate. For every £1 of income, they are losing 76.4% of that to income tax, national insurance, and so on. And after you've kind of worked out the numbers, you end up with a net amount in your pocket out of that £500 of £117.90. So if Tommy, if your painter costs £500, you know that's going to be the situation whereby you're going to get £500 of work for your locum shift. You're only going to have £117.90 in your pocket. So let's say due to 2 days work, well, you'd be £235.80 better off. You basically have to work 4.25 days as a doctor to be able to pay your painter for those 2 days work. And of course, what we're not including here, we're completely ignoring for the minute the tax-free childcare scheme, whereby you can get tax-free childcare, an amount you can get also tax-free hours, up to 15 hours or 30 hours if you're working for kids of a certain age. So all these amounts will just completely drop off if you go above £100,000 of net adjusted income. So to be honest, if you were on £100,000 of taxable income and you get that £500, you're going to have a quite stonking marginal tax rate, and that's before we talk about the childcare benefit problems you might get.
Yeah, and we're not saying that £100,000 is not a tremendous amount of money, but what we are saying is it cannot make logical sense in a tax system to have this scenario, which is disincentivizing people to do work. And I expect we're going to see more highly qualified medical professionals painting their house after this. But I actually remember the exact moment I realized the implication of this, because I was renovating a house and I was doing A&E locums, working really long shifts in really difficult conditions to pay my builders. So I would go to work before my builders arrived on site. And when I got home, 12 or 13 hours later, the builders would have been long gone. And yet I still somehow wasn't able to cover the bills for a day of builder time. And of course, once I sat down, did the calculations like you're looking at here, I realized that I was just getting caught in one of these horrible marginal tax rates, and I sacked off the builders, did a lot more of the building myself, and there was a few more A&E locum shifts that weren't available. So I think it's just really important to stress, we're not saying that these amounts of money are not really large, but the tax system should not be disincentivizing work like this. And Ed, it would be really helpful to get, in the last couple of minutes, a brief summary of what you could do to alleviate some of these situations, because you can do stuff about it.
Yeah, absolutely. And just to add to what Toby was saying, again, we're not saying that this isn't a lovely amount of income to have. We're also not trying to necessarily disincentivize people to do work. We know that times are tough. People, taking extra shifts to get extra money, and it's, at the end of the day, you will have extra money if you do these shifts. We're not in any way dismissing any of that. Okay. It's just to try and get you guys to realize, or to understand, if you don't know already, that sometimes earning that extra money can have different consequences to those that you'd actually expect. Okay. And this, of course, isn't just affecting doctors. Apart from the NHS pension, all around the country, there are people on this level of income who are suffering the same fate as well. So you may have friends, family, partners, loved ones who are also in this boat, even if they're not doctors or healthcare professionals. Okay, so make sure that they're aware of this as well. In terms of what you can do to alleviate this, I mean, that £100,000 mark, that is the killer, basically. Above that, that's when you get these ridiculous marginal tax rates. That's when you can lose that tax-free childcare, which is really valuable to a lot of people. If there's anything you can legitimately do to reduce your net adjusted income and go down below that £100,000 mark, you're going to be better off, okay? It's not that easy to do. There are a couple of ways. One of the best things you can do, though, if you haven't done it already, is definitely make sure that you're claiming all allowable deductions against your employment income such as your GMC fee or equivalent, your Royal College fees, your Royal College exams, your BMA fees if you apply. All these professional expenses, the ones that are allowable, and the vast majority of the things we spend they reduce your net adjusted income, okay? So if you had £101,000, that could be quite bad for your marginal tax rate. But if you've got £2,000 of expenses, you can bring your net adjusted income down to £99,000 and not be at this troublesome rate, okay? So make sure you're maximizing all your allowable deductions. It's really important. Other things you can do, these may be not for everyone, but again, there are two other clear ways in the legislation for reducing your net adjusted income. First of all, any charitable donations you make, if you're gift aiding them, you can deduct the gross amount of those charitable donations. And by gross amount, you basically multiply what you put in or donate times by 100 over 80. Okay, so you can claim that gross amount, deduct that from your net adjusted income, and that will reduce your net adjusted income potentially below £100,000, depending on what your level of income is, how much you donate, etc. Likewise, the legislation says that you can deduct the gross amount of any personal pension contributions. Okay, so we're not talking about the NHS pension. Okay, that's already been accounted for. You know, if you're basically making a personal pension contribution, then you can get a deduction for that, okay, off your net adjusted income. So you have to be very careful about that, okay? We're always a bit worried about recommending that people do this, because of course there are other issues with the NHS pension that I'm sure you guys will all know about. But just bear that in mind, okay? That's something that you might want to think about. And then there are some other ways. Again, they're not for everyone. They're quite difficult to do. But you know, if you've got sources of income that you can do via a limited company, some people might be able to do that, and they can, that would also reduce your net adjusted income. You'd have to think quite sort of carefully about that, though. Okay, so it's just a couple of examples of things that can be done. They're not easy, but if you're around the £100,000 mark, definitely worth thinking about. Okay.
Thank you so much for watching. If you're not subscribed and you want to see more things like this, hit the subscribe button, hit the like button, and ask questions in the comments. And in the comments, can you let us know whether you want to see more tax videos? If you want more tax videos, give us a thumbs up emoji. If you want more investing videos, give us the fire emoji. And if you want more how to start a side hustle videos, give us the shaka emoji, okay? That really helps to guide the content that we make for you. Thanks so much for watching. See you on the next video.